to you today, platform analysis. Platform analysis. How to analyze the platform. You see this platform, you see that there's a lot of complex, let's say complex images you can see. Sometimes you may not be able to understand it properly. So we will take our time to analyze it for you so that you can be able to understand how it works. Now, I told you about I told you about diffusion of trading, that it is done in pairs. Look at the pairs I'm talking about. So when you go in here, when you go in here, you see something like this. You see something like euro and dollar. You see something like Britain pound and dollar. You see something like Australia. You see something like JPY. You see something like AUD. You see something like NZD. You see something like JPP. Did you see that on your own, Bumi and Tommy Tobe? Did you see something like this?
I've seen, yeah, I saw something like that.
Now, all this is what is called currency pairs. It's paired.
Okay.
Yeah. Now, you see that they are in like two currency coming together. So why? Because in the global market, it has already been fixed. You're not looking for a currency to buy, a currency to sell. You're rather looking for a pair to trade on. Then when you check this chart now, you see that there are green charts, there is a orange chart. Can you see these things?
Okay, yeah.
I have green chart here, yeah. It's also a sign of different kind of instrument, rising chart and falling chart. Because of we have each of these currencies has two pair. So now when you see green and red, some of the platform can give you black and white, some can give you green and white, dependent. I mean, it can't just be one color, there will be different color. So all this entirely now is called chart. They are all chart. I mean, indicating the movement of the market, how it has been performing. Do you understand? So when it's forming the green one, it means that the price is going up. And from here, you see here now is the current price of this particular instrument you're watching. It means this particular instrument now is trading at 79.70. And this particular place here, you see this candlestick here, this one now is current candlestick. Basically, this chart is called candlestick because they look like candles. There are other platform who have line chart. That one look like a line. It's basically used by those economies that used to draw supply and demand curve. They use line chart to draw it. I don't know whether you are aware of that, but in the trading industry, chart like this is most commonly used. It's most commonly used. Then when the price is going up, the green one will be forming, and it will be forming together with the price. When the price is falling, the red one will be forming, and it will be falling together with the price. Let me know if there's any example of a falling market. For example, look at the example here, Euro US. You see that it is bullish. So it is bearish. I think you know what is bullish and bearish.
You just summarize, give us an explanation on that, please. Bullish and bearish.
So you know, in economics, bull and bears. Bull is like something that is rising. Bears means something that's falling.
Falling.
So now,
Okay.
yeah, now you see that this chart has green and yellow. So anytime you see, or let's say red, anytime you see the red one falling, it's a sign of bearish, that the price of this pair is falling, and it will also be falling together with the current price. You see that this price will be dropping drastically. Do you understand? The price will be dropping drastically, and because the chart will also be dropped. So basically, the chart goes together with the price, not price goes together with the chart. The price goes together with the chart, not the chart. Sorry, the chart goes together with the price, not the price going together with the chart. Because chart is just technical. So what is life is this chart. That's why if you check your phone on Google, check the price of euro and dollar now. Then you could see the price. Maybe I don't know whether you could do the price, the analysis now. Check euro versus dollar price, or euro to dollar. I'll give you an assignment, please.
Okay.
Can you check me the price of euro to dollar?
€1 to the 1.09.
Then what are you seeing here?
Okay. Yeah. 1.092.
So where do you get your data from? Is it on Google?
Yes, on Google.
So now is the Google, does it have a chart like this? It doesn't have. No, it does not have. Google doesn't have a chart like that. Now that's to say that what you're trading is global price. So price controls the chart, not chart controlling the price. Do you understand? Because most people come to the platform thinking that everything ends here. So if you check even on TV now, check the current price there, like maybe Channel TV or CNN, it will also give 1.09. But the remaining this is like the decimal point of it. You know, there's always other ratios. Yeah, but it means now for you to get €1, you pay $1.09.
Okay.
Do you understand? You pay $1.09. So on a global trading now, you're trading this thing now based on stock value. So, and it means also for you to trade on it, let's say now you place a buy on it, then, and the price moves to 1.0 to 1.10, 1.11, 1.12. It means it's going up, then you'll be making profit. Then if you place a sell and the price drop to like this is 1.09, 1.08, 1.06, 1.0, you know, keep dropping, you'll be making profit. You will lose when you place a sell and it's going up, or when you place a buy and it's coming down. Do you understand?
Please, could you come again?
As the price is 1.09, as the price, as the price is 1.09, for example, you will make profit if you place a buy and the price moves from 1.09 to 1.10, 1.11, 1.12, 1.13, you know, it's going up. Do you understand?
Okay.
Then you'll be making profit. As you can see, it's going up. You'll be making profit because you place a buy. Let's say you bought at this price, you bought at 1.09, and the price moved to 1.10, 1.11, 1.12. Obviously, you're making profit. Do you understand? So now, if you place a sell and the price dropped from 1.09 to 1.08, 1.07, 1.06, 1.05, 1.04. You'll be making profit. You'll be having losses if you virtually place a buy and the price dropped. You bought an item to sell, only for you to get home, the price of that item has dropped. You lose money because you obviously bought it 100,000 and you to sell it. Do you understand? So you reach your house or to your shop to put that thing up for sale, discover that the price has dropped. You're obviously going to lose money because the price of that item has dropped. Do you understand now?
Okay.
Then, but you bought it at 100,000. When you got home to your shop to display it, it's got that the price has gone to 130, 150. You're making profit. I don't understand, because you have chance of selling it off and make money. Or however, that is spot. We are using that scenario to interpret trading, where you trade on margin, where every movement count on your account. So you could see how the movement moves from 1.09, 1.011, 1.012. You'll be making more profit because you bought at 1.09. Do you understand?
Yes.
Then, assuming you place a sell and the price dropped, sell is not withdrawing off your money. Is to, because in trading you could have a sell position, you could have a buy position. It is called going long and going short. That is the terminology. So when you place a sell and the price dropped from 1.09 to 1.08, 1.07, 1.06, 1.04, you also be making profit because you place a sell at a higher price and the price dropped. It's similar on spot. You go to a shop. Okay, somebody came to your market, to your shop to buy an iPhone or an item. Let's say this eyeglass. Came to buy this eyeglass, and you sold it at 100,000 to him. Do you understand? You sold it at 100,000 to him. And now the price eventually dropped after 1 week to 70,000. That is the retail price, and obviously not the wholesale price. Then you go to the wholesale to buy again. You got it at 65,000 to sell at 70. Did you make profit from the first one that you sold at 100,000?
Yeah.
Did you make profit?
Yes.
Yeah. Now that is how it is done on digital trading. You place a sell at a higher price, the price dropped. How do you know that you made profit? Because you see that for your mind, you didn't see it because it was not done on digital level. For your mind and mathematically, you know that you sold it at 100,000 and it's now selling at 70,000. So you have made a profit of 30. But if it has done, if you did that transaction on digital level, you could see the track of transaction, maybe the chart, the performances, how it fell from 100 to 70. So that is trading. So digitalization is actually trading on the economies or on the world economy, and the trading on the movement of all these instruments for profit. It's also the same thing. But the issue is that the reality is that when you watch it on digital level, you could capture every movement. But if it's on spot, for the fact that I'm holding this eyeglass, does not mean that the value is not adding. The value is adding or depreciating, even though we cannot see it. But if you convert it to a digital stock, you could see each movement and each of the value per minute, per second, per hour, per day, per month. You could see how the value fluctuates, because everything fluctuates, including our life. In fact, when you start trading now, you see that your BP will start fluctuating faster than it used to. So you have not seen anything yet. When you start making your first trade. So that is trading. I don't know if I'm making sense. Now, there are how you make profit. You know that this is the market now. In this market, let's on this platform, someone may have 100,000 Someone may have 500. Someone may have 100. Someone may have like $1 million. They're all trading on the same platform, but not on the same capacity or not on the same volume. So that volume is what we describe in our former video, our former class as lot. It's called lot. Lot size is also called volume. It's also called unit, depending. People can call it unit of thread, lot of per thread, or volume per thread. It means you that's coming in with 500, someone coming in with 10,000 are going to buy at the same price, but will not have the same amount of return or the same result in terms of profit. Because the person that bought on with 10,000 will obviously is buying more unit than you that's buying with 500. You buy lesser unit. Now, out of that your 500, you also not going to use the entire 500 to buy. You use a portion of that 500 to buy, and that portion is called margin. It's here. This place. And that portion is called margin. So what is margin? It's like you have $1,000 to start a business. Then you want to buy a first market. Instead of using the entire $1,000 to buy the product to come and display on your store, you rather use 200,000 or 200 to buy the first product. Remember, your capital for business is $1,000, but you now use 200 to buy the first product and display. That one does not mean that your business does not have a capital of 1,000. It has, but you have converted 200 to the product and keep 800 as liquid, which is part of your business money in the bank. So if you make profit from that 200, and now you convert your product to cash with profit, your capital in the bank will become 1,000 plus. Now, that time you use that 200 to buy that product, that thing is called margin in trading. So when you have like 500, you could use maybe a percentage of the 500 to place this trade buy or sell, or to place the trade buy or sell. Now, that particular amount you use will be known as margin. It means a broker or a dealer will take it off and used it to open the trade for you automatically and kept it aside from your equity or from your balance, then it will become a margin. That margin is what was used to open the account, to open the trade. However, that margin is also going to be decided based on the unit of order you choose. Just like I said, 200, you want to use it to buy the material. So you may just go and buy 2 material. It means 2 units, and it costs you $200. So you have 800. So assuming you wanted to buy only one material, which is 1 unit, you may have probably paid only $100 to buy it and display at your shop, which is also 1 unit or 1 lot on trading. Do you understand? So this is where you can find that lot somewhere here. You see here, you see 0.01. If you click more here, you see 0.02, 0.03, 0.04. Then you can even type it like 1.00, which is 10. That's 10 unit or 10 volume. So anybody that uses this 10 volume is most likely buying the same Euro US at 1.09. If the price move, the person will be earning like $10 on each of the movement that happen on Euro USD. Then if a person just use one lot, 1.00, the person may be earning $1 on each of the movement. So if the price of Euro USD move from 1.0956 to 1.0966, the person, sorry, 1.09256 to 1.09266, the person has made $10 profit. Assuming it's on 10 lot, and the price moved from 1.09256 to 1.09266, the person has made a profit of $100. Then assuming you use 100 lot, the person has made, and you move like that template, the person has made a profit of $1,000. But if it's on commodity, it will be bigger volume. It will give you much more return. So this particular place now is where you can identify that volume or lot or unit, depending on the terminology. They all mean the same thing. It means a proportion of all the unit that determines the margin. That determines the margin the broker will use to open the trade and will also determine how your profit will be calculated per trade or per movement. You guys are very quiet. Ask me a question where you are confused. I think it's becoming more technical.
Yes, it is. From the margin.
I know.
I have to go by the margin.
Henry joined us. So ask a question. I'm listening. I just want to also welcome Henry. Henry, welcome. What question you want to ask on margin? You have a question on the margin?
Yeah, so I just needed to go back on the margin again.
Okay. Margin, let me define this again. Margin is amount on trade. The amount you use to open a trade. And that amount is decided based on the unit of trade you open. Then we have what is called free margin. Free margin means amount remaining to be used to open more trade. Means free fund available to buy or to trade more. Then your equity is your balance in the market. When I say balance in the market, is even from actual balance. It means that when you place a trade and you are gaining, it will be adding on your equity, not on your balance. Even if the trade is losing, it will also be reflecting on your equity, not on your balance.
Oh,
okay. But yes, but until you close that trade, then your balance will become normal and your margin will be returned to you. And your free margin will be the same with your equity and balance.
Okay.
Yeah, it will be the same. So when we start doing practical, you will see exactly how it works. I want to take another question because we are going on break by 12:30 in the next 6 minutes. I don't want to take your time more. Do you understand? Do you have a question to me, Tobe? Okay.
I'm still trying to wrap my head around it. I might just come up with questions along the line.
Don't worry, we will do practical. You understand more.
Okay.
Yeah, you
It's
see
a
why
little
people.
technical and confusing for now.
Yeah, you see why people doesn't scale up. Some people had been on the level of learning how to trade for 5 years. Some of them are trading, but they're just there, because 30% of people succeed in trading based on statistics. That's the minimum. Out of that 32, 30% out of that 30 or 10% out of that 30 succeed. These are people who have pitched themselves more. It could be technical. Yeah, it could be technical because you need it because you want to do it by yourself. You need to understand it grandly. That's also why we like to take time to teach people on a long distance. It's not that we're teaching something new. We keep, you know what I mean? Establishing that fact until it sink into their system. I mean, it become part of them. Do you understand? Yeah. So it's, but when you started doing it, it won't be as technical as I'm explaining it, because practical give you more. Even as I'm talking to you now, you're trying to understand something. But let me just know if you have been able to pick up one thing I've said, because I've said a lot of things from pairs, from price, from chart, from name of chart. From now, come to margin. Have you not understood something? We need to go home with, you need to like know, we need to go on break with a particular thing. What is it that is the only thing that you're holding on to?
Yeah, I've been able to grab the currency pairs,
Okay.
how we make money from the currency pairs when the currency has more value than the other. Then then I was able to grab the lot size, the bearish and the bullish candles pattern. Yeah, I was able to get the buy and the sell